The Reserve Bank policy was more on the expected lines. The rates have been left unchanged, and I think there was a good message from the policy, especially regarding the resolution of the stressed assets. The governor has made a very clear statement regarding the putting the resolution of bank stress assets on a firm footing and create congenial conditions for the bank credit to revive. I think it's a very strong statement which shows that they are working on it, and the guidelines on this matter would be expected within a few days. I think that would set the tone, because NPAs, especially for the PSB banks, are a big concern. And if the resolution can be found out, it would help the banking sector in a big way and also help in revival of the credit demand. Another thing which the credit policy has touched is regarding the liquidity. I think which has been a concern, especially after the demonetization when the banks were flush with the funds. Although, and almost I think 70% of the funds are still with the banking system, and that mention has been made regarding the standing deposit facility, which we have been hearing for a long time, and I'm sure the guideline would be issued in that matter, which would take care. The various other issues which have been taken up in the policy regarding the inflation and the growth expected during the current year, I think they are in line with what was the expectations, and the RBI would be looking to keep control on the inflation, especially the food inflation, and we expect a growth of around 7.4% GDP growth in the current financial year. And I think the overall being still having a neutral stance, the policy should give a right direction. And once the various guidelines are issued, especially on the resolution part, I think for the banking sector, it is going to be a big thing.